The issuance of stablecoins such as USDT and USDC is considered a key indicator in the cryptocurrency space. Many market participants believe that it has a certain correlation with the price of Bitcoin, BTC. Below is a detailed analysis of this relationship and the underlying logic from several perspectives. So, what does stablecoin issuance mean? Well, stablecoin issuance refers to the process by which issuers like Tether, USDT, and Circle USDC mint new tokens on the blockchain. This usually happens when users, often institutional clients or exchanges, deposit fiat money like US dollars to the issuer, and in return they get an equivalent amount of stablecoins. For example, if an institution sends $100 million to Tether Limited, Tether may issue 100 million USDT to their wallet on-chain. Why does stablecoin issuance matter in crypto markets? Well, first, it signals capital inflow. Newly minted stablecoins often represent fresh capital entering the crypto ecosystem. Since USDT and USDC are widely used for trading Bitcoin and other cryptocurrencies, a spike in issuance often indicates buying power entering the market. Another thing is, it serves as dry powder. Just like dry powder in investing, freshly issued stablecoins held on exchanges are potential buy orders. This liquidity can quickly be deployed to buy Bitcoin, Ether, and other assets, especially during market dips. It's often a leading indicator. In past bull markets, for example, during the years 2020 to 2021, surges in USDT supply actually preceded or coincided with Bitcoin price rallies. Many traders and analysts keep an eye on this as an early sign of possible upward momentum. Historically, there's been a strong positive correlation between the increase in stablecoin supply and the price of Bitcoin. From mid-2020 to early 2021, USDT's circulating supply ballooned from around $10 billion to over $40 billion, and Bitcoin surged from about $10,000 to nearly $60,000. The pattern usually goes like this. New issuance, then stablecoins flow to exchanges, which leads to increased buy orders, and finally, a Bitcoin price rally. However, the correlation isn't always immediate. Sometimes there's a lag between issuance and Bitcoin price action, depending on how quickly those stablecoins are used. Is there market manipulation involved? This is honestly a controversial topic. Supporters of Tether and USDC argue that new issuance only happens when real fiat is deposited. Tether and Circle publish attestations showing they hold reserves. On the other hand, critics argue that some academic studies, like the one from Griffin and Shams in 2018, claim USDT issuance was used to manipulate Bitcoin price during key periods. So, concerns remain around Tether's transparency and whether it's fully backed. In either case, market perception really matters, and traders often react to large Tether minting events. Not all stablecoin issuance means Bitcoin will pump. Context matters. If stablecoins go to exchanges, especially spot markets, that's likely a bullish sign. If they go to DeFi platforms like Curve or Aave, it might indicate yield farming or market-neutral strategies, not direct Bitcoin buying. And if they're held in cold wallets, it may reflect preparation rather than immediate action. What about other stablecoins? While USDT and USDC dominate, newer or decentralized stablecoins like DAI from MakerDAO, FDUSD, TUSD, and PYUSD are also in the mix. Alternative stablecoins are gaining traction. Monitoring their supply and usage can also provide clues about capital shifts within crypto sectors. So, let's talk about practical trading use and how to monitor stablecoin data. Smart traders, they often track stablecoin issuance using tools like Whale Alert, Glassnode, Nansen, and Look On-Chain. They also keep an eye on exchange inflows of USDT and USDC, since these can be signs of potential Bitcoin buying. It's a good idea to use dashboards that show stablecoin market caps, exchange wallet balances, and even things like velocity and usage rate. These metrics can really help you get a sense of what's going on in the market. Alright, here's a quick summary. When we look at stablecoin issuance, it often represents new liquidity, meaning fresh capital entering the market, which can be bullish for Bitcoin over the mid to long term. As for sentiment, increased issuance can signal market optimism or whale activity, which tends to strengthen upward momentum. In terms of utility, stablecoins act as dry powder for trades or DeFi, and the effect really depends on the usage context. But there's also risk, potential manipulation concerns, which can inflate short-term bubbles. So, just to wrap things up, the issuance of stablecoins like USDT and USDC isn't just some technical event. It actually reflects capital movement, investor sentiment, and overall market potential. While it's not a guaranteed predictor, large minting events often serve as early indicators for significant market moves, especially when it comes to Bitcoin.